Welcome to everybody to this presentation where we will cover our second quarter, but also the first half of our financial year 23. As you can see and as introduced, the presentation will be made by myself, Trond Williksen, and Septima Maguire. And we will take you through our program for such a presentation that you will recognize, starting with highlights, going a little bit deeper into the operational update on the three business areas, more granularity on the financials before I end up giving you an overview of how we look at outlooks, both in the short term but also in the longer term. So let me just start with the highlights of our second quarter in our financial year 23. It has been yet another time a good quarter for us in Benchmark. We've seen good progress with good contributions from all the three business areas. Also in this quarter, like in Q1, the contribution and the magnitude of the operations in each of the three business areas are what forms the results that you see. And yet again, we see that we continue with our quarter-by-quarter growth in our financial performance that we have now seen consistently for more than 3 years. Before going into detail about the operational update on each of the business areas, that's behind our numbers, I will just counter you through some of the key financials for the group in totality for the quarter. Top line is up 13% compared to first quarter last year, with increased efficiency throughout the group and good cost control. This has translated down to an increase in adjusted EBITDA of 32% compared to Q1 last year, ending with an EBITDA of 9.7 million for the quarter, and that is adjusted EBITDA excluding fair value adjustment for biological assets. Worth mentioning is also that we see good and steady performance in our margin. Adjusted EBITDA margin in the quarter ended at 25%. This is actually in line with our medium-term targets that we set out and communicated 1 year ago. We also see good progress if you are looking further down in the P&L, our adjusted operating profit excluding fair value, which is the EBIT excluding exceptionals and fair value, but also amortization on acquired assets, has grown very significantly to 244% to 4.5 million in our second quarter. We see this measure as a very relevant measure. As I said, it really takes away the exceptionals, the fair value movement, but also the amortization on historically acquired assets. Then on to a few words on how we are doing. If we look at the half-year point, again, we see strong development. Revenues for the first 6 months of the year are 25% up. Again, we see that is translated down to an even stronger growth in our adjusted EBITDA, up 47%. And again, we see that this is again translated down to our adjusted operating profit, excluding fair value, which is up 193% in the first half of the year. So looking at the key financials for the group in the quarter, we see that we have a strong financial performance in the first 6 months and in the last quarter. This is also, of course, partly translated into our balance sheet, and I'd just like to mention that our net debt is continuing to be lowered and has been doing so in the first half of this year. A main topic of the year has been the listing in Oslo, the world's leading aquaculture and seafood listing venue. As you know, we were successfully listed at Euronext Growth last December the 15th. As we also have announced earlier, we have done a consultation with our shareholders And the question has been whether to stay on AIM, dual listed and stay on AIM. The consultation has now ended, and the conclusion we have drawn is to stay listed both on Euronext Growth and AIM in the foreseeable future. And uplisting to Oslo Børs will be reviewed as part of the ongoing strategy to enhance the group positioning and share performance. Moving over to give more detail on the performance in the quarter in our three business areas, starting out with some highlights on genetics, where we again have had a strong quarter driven by our core salmon genetics activities in Norway and Iceland. In total, we have lifted our salmon egg sales from 58 to 63 million eggs in our second quarter, driving an increase in revenues of 14% for this business area. Q2 is really an in-between quarter and not the highest egg sales quarter traditionally. And the results reflects what we can expect for this period of the year. We are happy, of course, that we have increased our volume yet another time on egg sales. News in the quarter is that we now have finalized our configuration of our sorting facility in Norway, lifting the capacity to 150 million eggs. This has been the target that we've had for this facility since we established it. This capacity will be in place from financial year 24 onwards. This also marks the end of our investment journey that we've been on, where we have lifted our total salmon egg capacity, or salmon eggs that we're producing ourselves in the group, to 400 million eggs per year, 150 million in Salten, 200 million in Iceland, and 50 million in Chile. In Chile, we have seen progress on our journey to fill the capacity and take a meaningful share of this important salmon production market. We have had new customer wins at the same time that we have received now results from full production cycles of our pure Chilean genetics salmon strain that we have on there, from egg to slaughtering. We now got a full range of documentation. And what we see is that these documents that we have a very competitive product, which of course is important in building customer confidence on benchmark as being a reliable biosecure supplier of high quality salmon genetics in this market. The fact that we also have received the C3 compartment for our Chilean operation also opens new avenues for us. The Chilean salmon farmers will be the core market for our salmon genetics activities out of Chile, but exports to other regions now also becomes an avenue for us to utilize the invested capacities. Finally, on highlights on our genetics business area, we are continuing to strengthen our capability to be in the forefront of technology development. This has been a clear strategy over the last years. We strongly believe that the survivors in this business will be those who lead the way in new technologies and develop traits that solve some of the fundamental challenges of the industry. The fact that we are, among other things, are working on sterility and positioning for gene editing is already known. And our aim is, of course, to bring forward solutions over the coming years that further strengthens our positions as a leading innovative genetics company in aquaculture. A spin-off of strengthening competence and capabilities is that we also have increased our capacity on genotyping technology that is now widely used, and we are having a leading role in. The strengthening of that capability will contribute to reduced costs running our own breeding programs, but it also will enable us to offer genotyping as part of our offering when we are doing genetic services, which is part of what we do in genetics. Let me give you a little more granularity on the status and the way forward for the different parts of our genetics business. In our core salmon genetics business out of Norway and Iceland, we have a profitable and market-leading business, which we aim to expand going forward. We expect to continue to grow over time, helped by positioning towards existing customer base, but also expansion into new production paradigms as land-based salmon farming and ocean farming. We have a very good positioning there and represents an opportunity for us to grow in the years to come. Key to expand the position will be to be in the forefront of innovation that I just mentioned, that we are strengthening our capabilities to be. To maintain, of course, high genetic and technical quality of what we are delivering. We have lifted the bar there significantly, and as well as to keep our customer service, which also has been a key to drive that performance going forward. I've already mentioned the salmon genetics business in Chile, where we have seen some progress over the last quarter, also reflected in the financial figures. We will continue to develop our position in this market and also seek opportunities for export to new geographies out of Chile. And that now opens up, given that we now have received the disease-free compartment status from the Chilean government. In tilapia, we are not satisfied with the progress that we have had over the last years, and this is still an area where we are lacking profits. When I'm saying we are not satisfied, it's on the financial side. In terms of the quality of our breeding nucleus, I don't think anybody really questions that it's second to none. It's really good. But the way that we are organized, the business model we have, shows challenging to make profit out of. And as I mentioned during our first quarter presentation, we are currently doing a strategic review, aiming at least to keep the profitable genetic services part of this business. In SPR shrimp, the focus of this year is to regroup on the back of experiences from the first years with commercial deliveries. The shrimp genetics market is different from the salmon market, with large variation in terms of optimal genetics between the different markets and regions. One size really does not fit all. And on the basis of the experiences we've had in different markets last year, which was the first year of commercialization, we have now a program to optimize the genetics products offering. We are currently undergoing trials, which we now do in the market regions to be sure that we get the right feedback from the trials. And based on the outcomes, our plan is again to accelerate sales in the last part of the calendar year. As you can see from the figures, the adjusted EBITDA in the quarter is impacted by the fact that we are costing all the development now. Last year, part of the development cost in the first part of the year was taken to the balance sheet in case people react on the difference between the EBITDA figures this year and last year. That was what I planned to say on our genetics business area. Moving over to advanced nutrition, where we have had a strong quarter, given a strong first half of the year, given current market conditions. Numbers that you see from this slide might not look too impressive. Moving slightly backwards, quarter by quarter or quarter over quarter. For the first half, we have a slight growth on top line, flat on EBITDA, helped by FX. But despite these numbers, we are satisfied with the performance in this business area for the first half of the year and the second quarter. Market conditions for shrimp are not favorable and have not been that over the last 6 months. A range of factors are playing in, from reduced end market demand in main markets, cost rises in production, as well as climatic and disease challenges in some regions. This is, of course, affecting the stocking of the farmers in the different regions, which again affects the demand for nutritional solutions which we are providing. Southeast Asia, India, Vietnam has been the region most affected by this, but Ecuador have been the region that has been managing better throughout the situation. Our performance in the quarter for the first half has to be seen against this backdrop of a soft market. The organization we have in INVE, in our advanced nutrition business, has responded very well to the market headwind. And the result we show is due to strong commercial efforts and an agile operation. In terms of the organization, the way we work in this part of Benchmark, it's really something different from 3 years back in time, and we are proud of the development that organization has gone through over the last 3 years. We expect market conditions to stay unchanged in the short run. However, we believe we are well positioned to mitigate the effects and to take market opportunities to gain markets when the cycle turns again. I should also mention that our nutrition business towards marine fish, for instance, sea bass, sea bream in the Mediterranean, as well as other species, have done well over the last half year and also in the last quarter. This is approximately 25% plus of the market or the business that we do in our advanced nutrition business. So that helps mitigate the situation of a soft shrimp market. And of course, to grow our business within the marine fish market is of course a strategy that over time will mitigate fluctuations that we from time to time will see in the global shrimp market. Then finally on to the performance in our health business area, where we have seen solid progress in results in the quarter. And it should be said that this is a quarter which is not the main season for sea lice treatments. The results stems from the combined portfolio of medicinal sea lice treatments and enhanced commercial effort of what is now a combined commercial team within salmon. Even if treatment volumes for Ectosan Vet included has been lower in Q2 than in Q1, Q1 is our main sea lice treatment quarter. We still see increased adoption of the solution. New customers are coming into the play, trying the solution for the first time and adopting it as part of their toolbox for sea lice treatment. We see this as a good sign that the solution is spreading in the market, which we think we will benefit more from when we are moving into the main sea lice season, which is over Q4 and in Q1 next financial year. Key to us is, as we have communicated before, is to make the solution more adaptable to our customers, as well as less costly and capital intensive, both for us as a provider, but also for our clients. And a key to this is to get the CleanTreat system integrated into the existing infrastructure of our customers. And this is also why we have entered into the partnership with the leading specialist wellbit equipment provider, MMC, and ship designer Salt, to capture opportunities to integrate the CleanTreat system into new wellboats coming into the market. We are making good progress in this technical partnership. I must say that I'm happy with this partnership and the way it progresses. We're also working on first movers on integration for a wellboat solutions. And as of now, we are target to have the first contract in hand for such a solution within this calendar year. Finally, on health, we continue to see strong development in the use and sale of Salmosan. As I said, the result you see from our Q2 is It's a result from the combined portfolio that we have within Medicinal Sea Life Solutions now. The growth in Salmosan has been partly driven by a variation to the marketing label, which supports longer production product exposure, which again increases the efficiency. But I will also say that it's the growth we have seen is also also driven by the fact that I think the customers are now seeing that we are providing not only one solution. We used to have only Salmosan, now we have Ectosan also, and they now see that we have a portfolio that they can use in combination as an important part of their toolbox to solve the sea lice challenge. For the last years, Medicinal Solutions, before we entered into the market with Ectosan Vet, was really not a primary option for the farmers. I think now us having two solutions that could be used in combination is waking our customers up that this is part of what they can use, and we believe that this is also driving development of sales of both Salmosan, but eventually also Ectosan Vet, and we hope and believe that we'll see more of that in the time to come. With those comments, I think I end my introduction on highlights and operational update, and leave it up to you, Septima, to take us through a little bit more details on the financials.
Thank you, Trond. So we use certain KPIs to report our progress as a business and to gauge our progress towards our medium-term targets. Now, these medium-term targets were established last year and remain unchanged since that point. Ultimately, the KPIs are built around cash generation, which is our stated aim as a group. This has always been to be profitable and cash generative. As you can see, we're continuing to progress. Our revenue growth of 25% is well above the target 15 to 18%, and shows the solid fundamentals in our genetics and nutrition business areas, and also highlights the increased uptake we're seeing in our health business for the sea lice solutions on offer. With this good growth at a revenue level and good cost control, we're able to obtain operating leverage on that increased sales, and overall growth within our adjusted EBITDA margin to 22%, which is good progress in moving us towards our target 25 to 30% margin. Cash conversion has been gradually improving over recent years up to 43%, with better trading and improved working capital focus, having become embedded in the business areas. And this is helping us to progress towards that medium-term target of 70 to 80%. And finally, free cash flow as a percentage of sales. Within this metric, at free cash flow of 1% of sales, we're moving towards our target through significant discipline around CapEx, which will continue to move us towards the target of 10 to 15%. Moving on to look at the income statement in more detail. Given that we report quarterly, I'm going to talk to the quarterly progress, but I have included in the H1 numbers for reference purposes. So Trond's provided you with some insight as to the trading on a business area level, so I'm going to focus more on the group level. At a revenue level, we're progressing well in the quarter with growth of 13%, contribution to the overall growth of 25% in the half year, with good growth in sales and positive tailwinds from FX, from the US dollar in nutrition. Cost of sales was flat in the period, which is due to positive product mix effects, offsetting slightly higher costs in genetics and health due to higher activity levels. This has driven increased gross profit by 24% and increased gross margin from 51% to 56% in the quarter. In operation expenses, we've seen an increase of 23% in the quarter. This is driven mainly by an increase in costs in corporate and increased activities within the nutrition business to drive commercial progress. And of course, as COVID has lifted, increased travel has resulted, albeit not to pre-pandemic levels. These factors have all driven the increased adjusted EBITDA by 32% to £11.1 million, and excluding the fair value uplift, similarly, an increase of 32% to £9.7 million. Our adjusted operating profit, which Trond referenced, being operating profit excluding our exceptionals and the amortization on the acquired intangibles. So therefore, importantly, it includes the depreciation on the vessels and clean trade units. Now, this increased from 2.4 million to 5.9 million in the period. The exceptional costs noted here for the quarter are relating to the establishment of the dual listing of the group in Oslo and also exploring an uplisting to Oslo Bourse, and this increased to 1.7 million pounds. In the same quarter last year, we had a credit of 0.9 million pounds due to contingent consideration associated with a financial year 20 disposal. Net finance costs in the quarter increased to 2.4 million from 0.8 million, driven by higher FX losses and also credit hedge movements of 0.5 million, lower than the same quarter last year. All these factors drove the loss before tax to increase from 1.5 million to 2 million in the quarter. Moving over to look at cash flow. With cash generated from operations in the period of 13.6 million, we had a good start in the first half of the year towards cash generation. This was then supported by more moderate capex of 3.5 million pounds, where the main investment in the half year was investing in the new tanks in Salton to support reaching 150 million production capacity. And of course, ongoing renewal in the other genetics and nutrition facilities. The capex of 3.5 million pounds is in line with the full year guidance around capex, which was that it would be between 6 to 8 million pounds for the full year. One important investment we made during the quarter was the acquisition of the minority interest in Iceland for 8 million pounds. Iceland's an important part of our core business and also provides opportunities from a strategic growth perspective for genetics. Cash out for 7.9 million pounds for interest and taxes reflects the net cash interest cost of 3.8 million and the cash tax of 4.1 million. It should be noted we pay tax in our profit-making jurisdictions, which are mainly Norway, Iceland, and Belgium. And of course, the net proceeds from the December 22 equity issuance associated with the new Oslo Euronext growth listing of 11.4 million contributed to us ending the half year with a net debt position of 66.3 million. Now, with cash and available liquidity of 41.9 and 53.9 respectively, we've continued to have a strong financial position to continue to develop the group as we move forward. And with that, I hand back to you, Trond, to look at the outlook.
Thank you, Septima. It should stem from what we have presented so far, that we have had a solid start of the year, both if you look at the first half, the first 6 months, but also the second quarter. And where we are now, we are, of course, targeting good growth for the business in total for the year, in line with the market expectations that we see. We will, of course, continue our focus on achieving profitability and cash generation. This is a key for us. And also, it's a key for us to drive the progress to meet the medium-term targets that we set out to do, and that Septima went through and showed that we have good progress on so far. In our genetics business, we have good visibility in our salmon egg sales in our core salmon genetics business. The way it looks now, and this is gives us good visibility, is that on that part of the business, we will deliver a solid growth for the total financial year of 23. Key for us now is to continue the progress on the growth vectors that we have in Chile and on SPR shrimp. Those are important areas for us to move forward. And it's going to be a key focus for us to achieve that in the coming periods. On advanced nutrition, we, as I said before, we are not expecting that the market conditions are changing considerably in the short term. We expect them to stay quite unchanged. But again, we are very confident that we have an organization that is well placed to mitigate, a soft shrimp market. in a good way, and that is the proof of that is the performance in the first half of this financial year. And we are also very well positioned when the market again is normalizing to take up growth and to position even stronger within this business area. For our health business area, we are now into we have just finished with Q2 and we are into our Q3. Both of those quarters are low sea lice treatment quarters. The main sea lice treatment quarters are our Q4 and Q1. And so we expect that in Q3 the volumes that we are treating will reflect that we are in such a period, but we are well positioned to pick up when we are moving into our Q4. Of course, the key focus for us will be to transform the business model that we have within Ectosan and CleanTreat to make it more adaptable for the customer, leaner for us, less capital intensive and less costly and capital intensive also both for us and for the customer. And we will continue to drive progress on that area. I would also like to use the opportunity to say a few words on some key takes around the positioning and strategy of Benchmark where we are right now. We view ourselves to be really a unique bet on the aquaculture industry. And the aquaculture industry, as many of you know, is an industry that has very attractive fundamentals, is driven by megatrends, and it will grow going forward. Having now a platform in Benchmark where we are a market-leading aquaculture biotechnology company with three very well-placed interrelated business areas, genetics, advanced nutrition, and gives us huge opportunities. All of these business areas, which are critical areas for within aquaculture, we have market-leading positions. And a clear part of our strategy is that we are going to be where we are market leading or where we are convinced that we can get market leading positions going forward. From these three business areas, we are providing highly specialized products, meaning that, and this is also a key in our strategy, we are not a commodity business at all. What we are providing are highly specialized, commanding high margin, and that is reflected also in our margins. And all our products and solutions that we provide from these three business areas are mission critical, meaning that they are less impacted by fluctuations in the market. You know, both genetics, advanced nutrition, and health solutions that we have is something that the farmers need to have if they are going to continue to farm. And that makes our product portfolio more hedged against natural variation in the market. And these products and solutions we are providing through a very well developed and global network. We have a very relevant footprint into the global aquaculture industry. We have our own people in place in 26 countries. We are reaching customers every day with our products and solutions in more than 70 countries. A real unique company, a company and a platform that is now really starting to show that give us a good fundament for the future. This is also why, next slide please, we are very determined to continue the consistent development that you have seen from us over the last 3 years. On the right side of this slide, we show the consistent quarter by quarter development that we've seen over the last 10 quarters. Quarter by quarter, we have improved our performance. In total, top line 62%, but more important for us, of course, is that our adjusted EBITDA, or earnings from operations, is more than double in the same period. This is because we have a platform that we have improved over consistently over the last period, and that we will continue to improve going forward, driving further growth in what we are doing. In our genetics business, we expect to continue to develop our core salmon genetics business ahead of the market growth going forward. We are well positioned. We're going to work with existing customer base to get a bigger share of wallet, but also new customers and positioning for new production paradigms, being the ocean-based and also the land-based production paradigm within salmon, should give us good opportunity to grow further. In Chile, our aim is, of course, to take out the potential of this growth vector. We have seen no progress during the last quarter, and we will focus strongly to take out the potential that is in that growth vector. Now also with the opportunity not only to sell to the Chilean market, but also to export out of Chile, since we have now the disease-free compartment. Shrimp, regrouping right now, making sure that we tailor the genetics to fit more the different market conditions. And we foresee that when that is done, that we can start to accelerate again sales and growth into key markets. Advanced nutrition, a very strong business, very strong platform. That is a totally different platform now from 3 years back in time. Yes, we are meeting a soft shrimp market now, but we are very well positioned to mitigate that, and we are very well positioned to take on growth when the shrimp market again is moving on. And in health, we still consider ourselves to be in an early stage with the portfolio of sea lice treatments, medicinal sea lice treatments that we have. We will continue to work, of course, with increased adoption, but also to mitigate the business model, to be a leaner, less capital-intensive business model. That will be the future business model within this area. And finally, where we are right now, having had this consistent progress on the basis of the platform that we have established in Benchmark. Of course, going forward, there will be opportunity to add on activities to the platform that we are in, adding further growth to what we can take out of the organic growth in the platform that we have already established. With those words, I think we are finalizing the presentation, so we are open up for questions.
Thank you both for that presentation, and let me take some questions. When we look at the shrimp market, can you share with us any of your views on the pace of recovery in demand and what you're seeing out there in the market at the moment?
It's a very relevant question, I must say, and I wish I could give a very precise answer on that. You know, what we have seen over the last 6 months is that the shrimp market has been soft due to a range of factors. You know, the main factor is that the demand in the end market has gone down. We've had inflationary cost pressures, but also disease problems, and also even climatic challenges in some regions, you know. So it poses, you know, the market has become soft. We don't expect, based on what we see now, and also what we read from other sources, you know, we don't expect that to go over in the short run. You know, the shrimp market has had fluctuations historically, and you know, it will have that also going forward. What is the important thing for us, you know, is that we have a totally different organization now to mitigate the effects of it. So even if the market has been very difficult now for 6 months, you know, we see from the numbers that we've been doing quite well. I will say that we have been doing well. I'm proud of what we have been doing there. And we know that as soon as this normalizes more, you know, we are in a good position to continue the journey to grow that business.
Okay, thank you. Can I just remind our viewers that if you do have your hand up, perhaps you could submit your questions in written format via the Q&A button. Is there anything that you can say on acquisitions that you might have in your horizon?
No, I will be very careful doing that. I'm just pointing in my last slide. I'm just pointing to the opportunity. You know, if you've been following us, and you, Hannah, have been doing that at least for the last 3 years, you know that we 10 years, okay. Over the last 3 years, both me and Septima and the board have been very focused on getting our arms around what we have in our hands. You know, this is my way of expressing it, and I think that has been the right thing to do. You know, make sure that you have control of what you have, and take the potential out of that. And I think, you know, through the consistent development that we have had over the last 10 quarters, I think, you know, everybody understands that we are starting to get our arms so well around the business. You know, that when you've done that, you know, for us as any other company, it will be, and when you have such a unique platform as we have, it will be, growth will be a combination of further organic growth and M&As, you know, and there are opportunities to add on all the 3 business areas, and that will become a natural part of the development in the group in the future. I'm not saying when, I'm just pointing out that the growth of this company is not only dependent on what we can do out of from an organic point of view. You know, it could also add to the equation that we are adding on more to the platform that we have.
Okay, we should watch this space. What obviously the tilapia performance has perhaps not been what you'd have liked. Can you just expand on your plans that you're putting in place to address that?
Yeah, the thing about tilapia really makes sense from, you know, it's one of the biggest farming species globally, really feeds the world. You know, it's important in regions as a protein source for a lot of people. We know that we have a very unique and very, you know, second to none breeding nucleus with very high genetic performance. The problem for us, or the challenge for us, is that, you know, the way that we have organized that business, it's difficult to get to cash positive or to earn money on it. And we need to be realistic. You know, it needs, you know, sustainability means that, you know, you're sustainable in any aspect, including, you know, also profitable in what you're doing. So that's why we have been so open that we are doing a strategic review of how we are, what we do within that area. What we are communicating now is that, you know, it's meaningful for us in Benchmark to keep some engagement towards tilapia. We have genetic services as a part of what we do in our genetics business area, and to keep that is, of course, an aim. And then we are seeking, you know, what alternatives we have for the business model that we have today. You know, we are not concluded with the review. We've just been transparent that we are, you know, where we are. We just needed to do a review.
Perhaps one for you, Septima. It's reference to slide 10. What would the numbers look like if you stripped out all the loss-making businesses from Chile? And here I have the slide here. That's helpful.
So that's an excellent question. So from a revenue point of view, the loss-making businesses aren't really contributing from a revenue growth perspective at this point in time. So there won't be a significant difference around that, but there will be a significant difference around the adjusted EBITDA margin. If you consider the fact that within the Q2 on its own, the adjusted EBITDA loss was 1.1 million from those growth vectors, that you will see that move, that push towards that target margin. And in some ways, that incremental delta within our adjusted EBITDA margin represents the potential as we move those loss-making businesses from being loss-making to being break-even, and then also then profit contributing. And then similarly, from a cash conversion point of view, as we take away the drag that we have from a cash point of view around those businesses and make those cash contributing, that will then also act as a significant lever towards pushing towards that 70 to 80%, and then ultimately to drive that free cash flow towards that target of 10 to 15%. So, and that is why, you know, as Trond referenced, making sure that we focus on not only just the core businesses and the fundamentals within our core businesses, but then also pushing our strategic growth drivers forwards will ultimately make these medium-term objectives much more achievable in that sort of short to medium term.
Thank you. Can you talk about egg prices and where the competition is with disease? And have you seen any interest coming from onshore farmers?
Salmon egg prices, we are, adjusting upwards, to reflect increased costs, to cover in that, and to the extent possible, of course, utilize the market and the demand that is in the market. There is a difference in the egg pricing. If you look at the basic pricing for a generic product, of course, that is more challenging to lift up than when you are developing special traits that can justify, even higher prices. If you look at what we are trying to do strategically, of course, we are trying to make sure that we are developing these special traits, that could justify even higher pricing. We still think that egg pricing is too low compared to the value that we are offering. But the best way of changing that is to make sure that we have traits in our genetics that justifies that. To sell a generic product to a higher price is always a challenge. Competition, most competition on generic products as normal. We try to be specialized. That's part of our strategy. So that's the direction of travel that we go. Part of the speciality that we have had and the positioning we have done is against, towards the land-based salmon farming, which is now one of the two production paradigms that is showing up, land-based and ocean-based. We have a very high market share when it comes to land-based farming. We have traits that fits land-based farming very well, and we are very well placed out of Iceland to export to any country around the world. I think 29 countries I heard last time we have been exporting to out of that biosecure facility. And of course, that also represents an opportunity for us going into that paradigm to increase prices. And we should also be very well positioned when it comes to ocean farming going forward. So that's part of the development that we are, of course, very conscious on going forward.
Okay, thank you. Given what you've achieved over the last 3 years, how concerned are you that there's been no move in the share price over the same period? And what can you do to rectify it? And perhaps a moment to link in a bit of discussion about the decision to remain dual listed, which I know, what I've heard, will already be offering some comfort to some investors.
Yeah. Of course, share price is something both CEO and CFO has an eye to and has some current concern around. I think for me personally, it's important to say that I'm a strong believer in doing the right things for the business. And if you continue to consistently delivering on a business and communicating in a sensible way so people can really understand what we have in our hands. And I've been in many companies throughout my long career. This is the most exciting company I've ever been in with biggest potential. That's my honest opinion. And if we are, getting over time with, that message, so people are starting to understand what we are sitting on as a potential, and consistently delivering better results. My belief is that, at the end of the day, that is what is going to drive the share price. So that is the basis for everything we are doing. I don't think my shareholders or our shareholders, me and Septima, will benefit from me and Septima just sitting and looking at the share price, because that has no value equation. That doesn't create any value. What we are trying to do is do the right thing with the company, showing what we are sitting on, consistently deliver, and that's going to be the focus also going forward.
Absolutely, thank you. Are there any interesting nutritional products used by salmon farmers that you can add, perhaps back to your acquisition point, particularly in the juvenile salmon area?
It could be. And as I said, there are on all the 3 business areas, there are opportunities to add to what we are doing. it comes a point where we will look at that. From the nutritional side, we have, we are strong in salmon in genetics, strong in salmon when it comes to sea lice treatment, of course. But on our nutrition business, we are not in salmon at all. And that has historical reasons. It's no good reasons why we shouldn't be that in the future. So, of course, this could be within the scope of expanding that business if you look down the road.
Okay, well, that's it in terms of the questions we've had submitted. So thank you both very much for your time, and we look forward to hearing more in another 3 months' time.
Thank you, Hannah, and thank you for everybody attending.